Hey, good morning, everybody. So, there's some exciting news about Digital Brands Group Inc. So, they have opened their first store in a suburb of Dallas, Texas, called Allen, Texas. And it just came out today that the TXSE Group Inc. announces plans to create the Texas Stock Exchange. Really exciting stuff, right? So this will be headquartered in Dallas, Texas, and will focus on enabling U.S. and global companies to access U.S. equity capital markets, and will provide a venue to trade and list public companies and the growing universe of exchange-traded products. So that sounds like the growing universe of exchange-traded products. That sounds like crypto to me. TXSE will be a fully electronic national securities exchange that will seek registration with the U.S. Securities and Exchange Commission. TXSE Group has successfully completed its initial capital raise with more than 24 investors, including some of the largest financial institutions and liquidity providers in the world, such as BlackRock and Citadel Securities, as well as prominent business leaders from around the country. They already have 120 million of capital raised. Wow. So yeah, they're gonna be cutting cost. New York Stock Exchange and Nasdaq are pretty. The costs are getting pretty expensive. So the Texas Stock Exchange will cut the costs. And the fact that it's going to be located in Dallas, so Dallas is going to become like the new financial capital of the South, basically. And so the Sundry store being in Dallas, right next to this new, you know, area that's going to be a huge financial center, that's going to be a really big deal. So long term, that'll really generate excitement and investment in the area, and yeah, all that stuff. So DBGI is sitting at $1.72 right now. There was just had some volume come on. 3,000 shares just traded. It just spiked up, but we're still seeing it's 46,600 shares traded today so far. So actually low average volume, and that's kind of to be expected. No big run-ups are going to happen until August, as I mentioned yesterday. But it could go to $3 to $5 really easily, because again, the float, the supply of shares is less than 2 million shares right now. So it's a really low float. It could run at any time. All people have to do is set a sell order to $3 to $5, and if enough of them get together and do that, current owners of the stock, it could go way up really easily. And then there's the the futures market. So now we're going to look at the warrants. Wow, I wasn't expecting that. The warrants already went way up today, and we're seeing above average volume. The warrants are sitting at $11 right now. Yesterday they were just above $9. So the warrants are up $2 in only a day. Wow, that's a good sign. So it could actually spike way up and do like a, I want to call it like a parabolic short squeeze. It may or may not actually be caused by a short squeeze. Let's see, the short interest right now. So what I'm using doesn't display the short interest, the trading platform I'm using, but let's look at the short interest on fintel.io. Okay. So the short interest is actually low right now. There's only 22,000 shares being shorted, or 1% of the float. So that kind of means right now that no one wants to short it because everyone knows it's going to go up pretty soon. And then the off exchange short volume is 8,746 shares, and the off exchange short volume is 50%. So that's interesting. That gets into a lot of technical stuff that we're not really going to go into right now. Yeah, I'm pretty excited just to kind of take the time just to kind of chill out, talk about stocks. It's really hot out today here in Kingman, Arizona. So I'm kind of just like chillaxing here. And yeah, no, the Texas Stock Exchange is a really big deal. Trying to see when that might happen. They've already raised a lot of the capital for it. Yeah, I mean Dallas. Wow, Dallas is just gonna skyrocket. I mean, it's already doing really well, but once the Texas Stock Exchange goes in, it's going to skyrocket even more. And that's going to be, extremely exciting. Yeah. So it's interesting though. I could see this one going either way. If it does fall back down below $1 before August and goes into the pennies, I mean, wow, a bunch of people are going to buy up tons of shares. Um, I'm trying to think of what could cause that. I'm not really coming up with much at this point. Again, it's at an inflection point. They had a supply chain issue in the first quarter that's going to delay revenue to the second quarter. When this revenue for the second quarter gets reported, it's going to have a whole lot of extra revenue that was shifted over from the first quarter. So just that alone is going to make it net income and possibly even cash flow positive for the first time in its existence, in its history of the stock. And it's a tech company that happens to sell apparel. And yeah, I mean, if you look at the valuation of the company, um, right now, revenue has increased from 2.79 million last quarter to 3.58 million this quarter. And the operating expense, like I said yesterday, has went down by almost half from 6 months ago. And from last quarter, operating expense was 3.28 million last quarter and 1.95 million this quarter. That's a really big deal for an apparel company to be able to cut costs that quickly. And the balance sheet is strengthening, growing stronger from what it was last quarter. There's more equity. Cash flow is now neutral. And then, of course, there's the store itself. A celebrity could walk into that store and do like a Mr. Beast style YouTube video, and they could buy the whole store if they wanted to. A lot of celebrities are relocating from Hollywood to Las Vegas, to Arizona, to Oregon, to Texas. And Texas has a business-friendly climate. They are gradually also becoming more environmentally friendly. It's going to be interesting. It's going to be really interesting. And let's see. Small cap stocks. Okay, so small cap stocks in general have kind of bottomed out, and that's happened because of the macro indicators like the Fed. Fed has not lowered the interest rate yet. Once they do that, so these small cap stocks, a lot of them have been going down because of the macroeconomic factors like the Fed raising the interest rate. It's at a pretty historic high right now. So, obviously when that happens, there's a whole list of things that kind of go along with that. And once that gets reversed, the same trend that caused them to kind of go down is going to reverse. And it could happen gradually. They could do kind of like a stair step up. But some of them will do like a parabola. A parabola just suddenly, especially the ones that like hit the bottom hard, which is what happened with DBGI. And Bird is another one. Allbirds shoes, ticker symbol BIRD. That's also a good investment. So that's at an all-time low. Bird's at an all-time low right now. So they do really cool shoes. And we're DBGI is up today, so it's not at an all-time low. So maybe some people are waiting for it to go back down. Who knows? But I am seeing some more volume coming in right now. I have a process of share accumulation that I'm doing with DBGI. So I'm going long. I don't know. I mean, if it suddenly skyrocketed like tomorrow to like $40 a share, that would really be cool. I kind of, because of the pandemic, I got stranded alone living in a cabin in Mars Hill, Maine for, let's see. Well, I was living in Waterville, Maine too. But total time I was in Maine, I was like basically stranded alone for like, 2 years. Yeah, like 2 years. I mean, some of it was fun. I'm not gonna lie and tell you it wasn't fun. Some of it was fun. Kind of just doing whatever I felt like doing. That was kind of fun for a while. But now, it's kind of just time to. I definitely wanted to like move somewhere else rather than here. Just like a bigger city with like a kind of a walkable European style cafe culture. I mean, my dream city would be like somewhere in NYC. Maybe like, Brooklyn, Queens, Bronx. Probably I would move to Queens. Mostly for dating reasons. There's like hundreds of thousands more single women than there are men in NYC. So that's pretty cool. Yeah, I would probably move like, as soon as it hits like $40 a share. I should have enough to like um, kind of unwind everything that happened to me during the pandemic, and then yeah, buy a house in a bigger city, like I had intended to before. So yeah, I'm kind of looking at the top 20 most populated metro areas, um, kind of narrowing it down that way. Looking at keeping my living expenses pretty low because I'm a single guy. I'm alone. Um, yeah, so I mean, I think you can see stock investing is a good way to move yourself forward with sometimes with very little capital. You know, $1.72. Oh boy! I mean, if you bought like 50,000 shares, you would still be in less than $100,000. And how many houses right now can you buy for less than $100,000? I guess is where I'm going with this. Not many. And if you do, take it from me. I also buy foreclosure houses. Oof, that's some rough, tough stuff right there. Let me tell you. Um, just the creepy stuff I've seen. Mold, threats, extreme drug addiction, um, um, all kinds of other illegal stuff that people might be doing, and they may not be doing anything else either, you know. But kind of like I guess the point economically I'm making here, you know, um, houses are way overpriced right now, and to be able to buy like say 50,000 shares of DBGI stock and just sit on it through the end of the year, or even 1 to 2 years from now, um, it could easily hit $90 to $100 a share. And then obviously at some point they do a stock split uh, to lower the share price, and then you would double or triple your amount of shares, right? Because like I said before, they already did 2 reverse splits. Eventually, they're going to do a stock split and unwind some of that reverse splitting. So some of that pain will be unwound. I don't know that the emotional pain myself and other investors went through can be unwound. I don't know. And that's kind of the point of the Texas Stock Exchange. Is the NASDAQ and the New York Stock Exchange, they have a $1 minimum share price requirement. But some of these new emerging growth companies, which is what these are, they're emerging growth companies. DBGI had its IPO in 2021. Allbirds had its IPO in 2021. So they're pretty new emerging growth tech companies. Is it fair to say that every tech company with a share price below $1 is automatically just going to collapse and go down to zero? No, it's not fair. And the people that are saying that, they're trying to sell you S&P 500 mutual funds. Someone like at Vanguard who, they're trying to sell you a mutual fund. And those aren't bad necessarily. Um, the S&P 500, again, it's hit an all-time high. It's going to go down at some point. We just don't know when. It could even go slightly up and then peak in early 2025 and then suddenly lose 30 to 40% of its value in spring 2025 or summer 2025. We just don't know, but an S&P 500 sudden downward spike is coming. Let's look at Berkshire Hathaway. Ticker symbol BRKA. So they had a sudden price drop from like 625,000. Now they're at 616,000. They bottomed out at like 612,200 today. Then it went back up. Right now it's like 616,755. And then what no one's kind of talking about with Berkshire Hathaway is the Treasury bills. Well, I take that back. No, there was an article. There was just an article about it. But you kind of would have had to dive deep. I don't know. Anyways, I think like 4%. It was saying of Berkshire Hathaway's holdings are Treasury bills, and that gets interesting because that's a government vehicle. So, it isn't really possible for Berkshire Hathaway to like collapse. That being said, if you look at the 1-year trend, it was like $500,000 a year ago. Kind of had a 5-year low, 257,000 in March 20th, 2020 when the pandemic happened. So let's just say if we kind of smooth out that line, we're looking at like maybe a structural base for Berkshire Hathaway of like $400,000 a share. So when the S&P 500 drops, likely Berkshire Hathaway will as well. So we're looking at, it could drop to $400,000 to $500,000 at some point next year. It's a low float stock. So I don't know if too many people know that, but there's only like 1.44 million shares outstanding of Berkshire Hathaway A. And then the Series B shares are, of course, those are affordable. Those are like $408 a share. And it's not really telling me. It's just giving me shares outstanding for Berkshire Hathaway Series B on Google Finance of 1.44 million. That may not be accurate. It may be like 1.44 million for both Series A and B. That's just the publicly traded float. Anyways, they basically economically, what Berkshire Hathaway did is they figured out what are all of the sectors, the complete scenario of the entire economy. And they figured that out and they hedged it for risk. That's what the Treasury bills do. And they're also, they made a lot of money from Geico insurance. So they're in the insurance industry themselves. So they already know all about forecasting risk. So they've kind of set this up to be an efficient way, what's the highest and best use of their capital. That's what Berkshire Hathaway is set up to invest in, is just whatever the highest and best use of capital is at any given moment. At this point in time, it probably adjusts itself on a daily basis. I'm definitely not saying like DBGI is going to be like the next Berkshire Hathaway. Don't go there. Although, I will say this. Let's go back. Let's look at their 5-year chart. So the IPO was 2021. June 25th, 2021, the share price was $13,725 for DBGI, Digital Brands Group Inc. Let's think about how wild that is. Again, $13,725 a share on June 25th, 2021. And their IPO was in May 2021. That's just wild stuff. And that share price has been adjusted for reverse splits. So the reverse splits have artificially raised the share price, the historical share price, to $13,725. But at the time, it was probably like, between $3 to $5 or under $10 or whatever. It's just that it's been reverse split so many times that supply of shares has been adjusted. So if you bought one share in June 25th, adjusted for the reverse split, it would be $13,725. That's just wild. I mean, and then here's another point on the 5-year chart. $4,525, March 25th, 2022. That was when the Fed put in their policy to raise the interest rate, right? So that's kind of where it bottomed out. It was over $4,000 a share when the Fed started raising their interest rate. And then it did not a sharp slope down, but kind of like a sliding, kind of like a gradually sliding over the course of a month. So over the course of a month, it went from $4,525, and it hit the bottom at $562 on May 6th, once it became clear what the Fed's policy goals were. Which is kind of to just lower the cost of everything, basically. I mean, that's not what happened, obviously, because corporations don't want to suddenly be told, oh, you have to sell all your stuff for 10 times less than what it cost before. But for average people like you and me, the cost of our assets basically got destroyed. So that was fun. Well, not really, but so looking at this point, in a month, so when the Fed, sorry, let me back up. when the Fed lowers the interest rate and then people realize what their policy is, it'll probably do the same function but in reverse. So instead of gradually going down from $4,525 a share to $562.50 a share, it'll go up from like $50 to $100 a share. Well, so let's say next quarter should have positive net income, positive cash flow. It'll probably go up and stay around $30 to $40 a share. Let's just say that. It'll change the trading dynamic. So now that it's at $30 to $40 per share, and then let's say the next 2 quarters after that are positive. Now it's like, let's just say like $50 to $60 a share. Maybe it's dipping down to the 30s and 40s still, but it's mainly around $50 to $60 a share. So when they lower that interest rate, basically it could go to, it could suddenly go, I'm just going to come out and say it, it could suddenly go to $1,000 a share or more. That doesn't sound believable, but if you look at the 5-year chart, it is believable. And if you look at the econometric data, it is what could happen. Now, the psychology of someone wanting to buy that, it may not. So it may go to like $500 a share. And then once people realize that the Fed is going to continue cutting rates after that, and it makes its policy clear, then it could go from $500. Let's just say a year or 2 after that, it could go to $2,000 a share. Yeah, I mean, it would probably do a parabolic short squeeze to a lot of people have averaged down by now. But I mean, it's still, and there's trading limitations. Exchanges put trading limitations on how high you can set a limit order. So like right now, so let's see. All right, so I'm going to put a limit order for and this is something I'm going long, right? So I'm going to put good till canceled. I'm going to put good till canceled, and we're going to change the date here. We're going to see how, okay, so it only lets me go out to like November 29th, 2024. It doesn't let me go into the next year. So we're going to see how much it'll let me go out. Okay. Share price. Gonna try $102 a share. $101 a share. And it won't let me set a share price that high. I'm gonna try $100 a share. Okay. It's gonna let me set a share price of $100 a share. Okay. So I'm gonna set that right now. $100 a share. And yeah, no, this is exciting. Because if you look at the data again, when the Fed lowers the interest rate, what'll happen is it'll reverse. So it's kind of like a stair-step function, and it'll either do a stair-step function up, or it'll do a parabola. And it's not really possible for it to do a parabola to like, say, like $4,000 a share. But it could go $100 plus. Obviously, some people aren't going to sell; they're just going to sit on it, even at 100. It's at $1.65 a share right now, and even $100, some people aren't going to sell it; they're going to sit on it. So the first step, so the parabolic short squeeze, you know, it could go anywhere from $40 to, like, let's just be realistic, $40. Let's just say $40 to $90 would be a parabolic short squeeze, that's spectacular if you bought it at $1.65. But you actually kind of want to be patient. Maybe sell some of those and then reinvest, double down, accumulate some shares, wait for the next plateau, wait for the next stair step, and then wait for the next parabola. Yeah, it's probably going to be a stair step function back up to regain its former 2021, 2022 share price. This is just extremely exciting. I really should have done this in the 90s. Just kind of kicking myself for not doing that now, but and by the way, DBGI is already on Amazon. I don't know if some of you know that or not, but there was a big article back when the price was spiking, going crazy wild in 2022. The Amazon added DSTLD brand. So those really cool jeans I was showing off before, Amazon added those. Yeah. I guess it sort of makes sense. The share price is so low. Because a smaller cap stock, people don't want to take the risk. And it could go lower and they could accumulate more shares. Because quarterly financials, second quarter doesn't get reported until like August 20th or so. So it's so long off now. But if you look at the futures market, let's go back to the futures market, DBGIW. So from yesterday to today, it spiked up to $11.80. Went from $9.12 yesterday to $11.80 today. And now it's down to $11. I'm not going to pay $11 for a single warrant of a stock I can buy for $1.62. That's ridiculous. It makes no sense for the warrants to be more expensive than the share price. That just tells you that the share price is artificially low, because the stock warrants should always be cheaper than the stock itself. Because otherwise, you would just buy the stock itself. Why would you bother buying a stock warrant? Which the futures market's all about using leverage. So, if the warrants were like 5 cents, 5 cents per warrant, it would make sense for people to buy it, because then they could buy up a bunch of warrants. They could buy up like 500,000 stock warrants, and people who couldn't afford to buy 500,000 DBI shares could buy all these cheap warrants and wait till the price goes up, exercise the warrants. But I think these are pre-funded warrants, so the exercise price is already built in. And they're not a good deal. I would not buy the warrants. Yeah, I mean, I don't get it. Why are people buying the warrants and not the stock itself? It doesn't really make a whole lot of sense. I guess maybe it's people wanting to go long, but if they want to go long, just buy the stock itself and sit on it. Yeah, I mean, the warrants date back from a time when the share price was higher. So those warrants were issued when the share price was higher. So at that time, when the warrants were issued, when the share price was over $100 in early 2023, the warrants, $10 for a warrant was cheaper. It was a tenth of the share price. Now it's not. So I don't know. Maybe the warrants will short squeeze before the stock itself does. Okay, maybe I just answered my own question. That could be why. That maybe people are not buying the stock itself and they're buying the warrants, because when DBGI becomes profitable for the first time in its history in August, the next quarter, the warrants could go from $11 to $500. Wow. Yeah, no, they could. Because if the warrants are 10 times what the stock price is, that means you could buy them and set an order to sell them for 10 times, if I can set an order to sell a share of the common stock now for $100, and that's the maximum I can do right now, that means 10 times that for the warrants. So someone who's, I'm talking about big money people right now, okay? If you're a big money player, what you could do is you're going to ignore the stock itself, right? And you could buy the warrants. You could buy as many warrants as you can get your hands on. Then you could turn around and set a limit order for like $900 a share. And when it becomes profitable for the first time in its history, the warrants could short squeeze into the hundreds of dollars. Now, the stock itself, the common stock, will likely short squeeze anywhere from $40 to $90 a share. So if you have like big money and you're wanting to go all in on DBGI, you may actually want to buy the warrants, because you can set a sell order for 10 times the amount that you could of the common stock. And now that may not happen, and but you can always cancel that, or just let it expire. You can let it expire, and then when that expires, do a new order for $900 a share for the DBGI stock warrants, and then you could just kind of keep playing it forward, keep accumulating shares. Wow. I mean, I just gave myself an even more of a reason to go long. I don't even know if I even want to sell at $100 a share now. Wow. All right. Happy investing, people. That's almost an hour.